Is NIO stock ready for takeoff? Hey everybody, this is Stacking Cash. Today we're going to be taking a look at the latest NIO stock news and how they have been faring in these uncertain times. Recently, NIO released their monthly deliveries for the month of February, and on the 25th of March, they will be releasing their earnings for Q4 2021. The stock has numerous catalysts ahead of it, and investors must watch out for these increased geopolitical risks. Before we go more in depth, I would recommend to subscribe to my channel. This way, next time I upload other NIO stock news or other EV company news, you'll be making sure to be notified by YouTube. The short-term goal of this channel is to reach 1000 subscribers, so your support would be appreciated. NIO stock has seen increased volatility in the face of all the macroeconomic uncertainty that this market faces. In this video, we'll be covering the latest monthly deliveries for NIO and also more catalysts that could catapult NIO stock price in this or the next year. NIO recently reported its latest figures for deliveries for the month of February. The company delivered 6,131 vehicles, a 9.9% year-over-year increase. On the surface, these numbers look weak, but we have to consider that February is the shortest month and it follows the Chinese New Year. In other news, NIO will be announcing its full year and fourth quarter results on March 24th. This should give us some deeper insight into the yearly performance and the upcoming developments. With that said, there is still a lot to get excited about before earnings. I have already mentioned other catalysts in previous videos, including the NIO and Shell partnership, the NIO factory that's being built in Hefei, and the fact that NIO is looking to expand its business not only in EVs but potentially in phones and other non-EV products. But there are 3 more reasons to be bullish on NIO stock right now. Here are the 3 more reasons to buy NIO. NIO has recently announced that it will be looking to list its shares in Hong Kong and Singapore. The company has obtained preliminary approval from the Hong Kong Stock Exchange and believes shares could be available for trade by March 10th. Meanwhile, the Singapore application is being reviewed as we speak. For the most part, multiple listings are considered good for stocks. This will make NIO available to a whole new set of investors. With that said, the new listings indeed show the fact that NIO could be concerned about its ability to continue trading in the US. In other even more bullish news, NIO is launching a sub-brand with a planned annual capacity of 60,000 units. NIO's idea here is to create a lower priced model that can tackle the mass market in China. The relationship between NIO and the sub-brand could be compared to that between Lexus and Toyota, or Audi and Volkswagen. NIO's products are made for the premium market and are priced accordingly. This was a smart approach since the higher end market has been faster to adopt EVs. But now, with the release of the new sub-brand, NIO is ready to tackle the lower end of the market and compete head to head with some of the lower end auto producers. There has been speculation lately that NIO will be launching a smartphone business to complement its auto offerings. According to that recent report, NIO is in the early stages of developing smartphones specifically designed to interact with cars. NIO is allegedly hiring experts in phone-related jobs, but there is not much more we know at the moment. In any case though, this could be a very interesting growth avenue for NIO. In some way, we could say that there are similarities between NIO and Apple. This EV revolution can be seen as an extension of the upgrade that we have seen when we went from the regular phones to smartphones. Cars today are computers on wheels, and they should be thought of as such. Making them compatible and easy to interact with other devices will be a key feature moving forward. Most notably though, NIO should be particularly successful in launching its smartphone. Like Apple, NIO has managed to portray an image of exclusivity and created a devoted following. NIO doesn't only make cars, it partners with brands, has an app, and provides the NIO House, which acts as both the charging station and an exclusive clubhouse. Therefore, we think that NIO could be quite successful in launching its phone. Perhaps these rumors will be addressed in the next earnings call. What are the risks for NIO stock? Although there is a lot to like about NIO, the recent geopolitical situation also puts NIO and other companies at risk. China is a well-known ally of Russia, and the tensions between Russia and the US will further tensions with China too. We have already seen Chinese stocks Even megacaps like Alibaba suffer from these tensions. NIO and other EV producers are not immune to regulations and restrictions. As we begin to think of EVs as computers, it will also raise the question of data accumulation and data protection. Cars will be a new source of data for companies, and foreign countries might not look fondly at Chinese company that can gather a lot of data. The main takeaway? All in all, NIO continues to look like an attractive investment. With many upcoming catalysts, we will probably be seeing some movement leading up to and after earnings release at the end of this month, so this might be a good moment to add or jump in if you haven't already. This is just one of many exciting tech stocks that you can buy right now. In the comments, I'll be linking all of my previous NIO videos if you are interested in them. You can find playlists of both EV news and other NIO stock news in my channel. Thank you so much for watching, and I'll be wishing you a very good day.